I'm Yaneli, also known as Miss Be Helpful, with another FinCap Friday brought to you by NGPF. Most people buying a home in the United States get a mortgage loan from the bank in order to help them pay for it. Now, you might have heard of a 15-year mortgage loan or a 30-year mortgage loan, but in late 2025, a new idea came from the Federal Housing Finance Agency, and that was a 50-year mortgage loan. Now, this new idea was proposed as a way to help with one big problem. Homes have been getting more and more expensive over time, and the monthly payments on these regular mortgage loans have gotten really difficult to keep up with for a lot of people who don't earn high incomes. Some people like the idea of a 50-year mortgage because they say the average age of a first-time homebuyer in 2025 was about 40 years old, which was way higher than ever before. So having smaller monthly payments as a result of a longer mortgage loan term would make owning a home much more affordable and accessible to younger buyers and families. However, many experts and critics warn that this comes with big drawbacks. Over 50 years, you would pay a lot more in interest, sometimes hundreds of thousands of dollars more. And since mortgage lenders charge most of the interest early on in the mortgage loan, you would take much longer to actually own your home by building equity, which could hurt your financial future. Not to mention that lenders would be charging higher interest rates on these 50-year mortgage loans because the longer a loan term is, the more risk comes with that loan for the lender. Now, let's do some mortgage math for a home worth $450,000. A 30-year mortgage loan with a 6.25 interest rate would come with a monthly payment of $2,771. After you've made all 360 payments over the 30-year mortgage term, the interest alone would be $547,436. Now, with a 50-year mortgage, at the same rate of 6.25%, this would make your monthly payments about $300 lower, so $2,454 a month. And after 600 payments over the 50-year loan term, you would have paid a total of $912,666 just in interest fees. So if you think lower monthly mortgage payments sounds like a good idea and that a 50-year mortgage doesn't sound so bad, then consider the trade-offs. More risk for lenders, which leads to higher interest rates for homeowners, and slower equity growth as well. Then ask yourself, does this really sound like a win for homeowners?